Good morning, everyone, and welcome to the European crossover webinar. And we're seeing some data that has come out over the squawk. And we did get market manufacturing flash PMI earlier out of France, which came in just a bit weaker at 49 versus 50, with services just a tad bit stronger. German market manufacturing flash PMI 57.9 versus a poll of 56, with services pretty much in line at 46.2 versus 46.3. And then just now, Eurozone flash PMI came in at 53 versus 53.6 versus what they were expecting, 53.1. Bottom of the hour, we'll get UK flash PMI. That's expected at 42.5 with manufacturing at 56.5 for UK data. And as we roll into the States, we'll have market flash PMI that'll come in at 9:45 Eastern. And that's going to be about the only piece of data. There's the National Activity Index. That's a very, very low tier thing. So really just the market flash PMI at 9:45 Eastern. And as I mentioned, we'll have a UK flash PMI at the bottom of the hour. Taking a look at where we stand here. Euro dollar is just a tad bit stronger, not a whole lot. We'll take a look at cable. Definitely pretty good run up here in cable. We've made it actually up to this level, which is a resistance. So that I think it's above our bias chart resistance, but this is a resistance level. You can see here the close here, which is 33.80. So probably see a little bit of a dust up at that point as far as volume. That would really have to take it. If we can get past 33.80, I'd have to say that's our resistance for today. I don't think we headed up this high, but that would be the key level, the close. If we can close above 33.80, that would take us to another leg. So that would be our daily bias chart resistance for today, 33.80. Taking a look at odd. Yeah, right here at that 73.30. That's our bias chart resistance. I know 73.30. And then lastly, the Kiwi. New highs. I think we have 69.75 for our bias chart resistance here. And then lastly, I will take a look at the CAD, which is weaker. There was some talk about, are we seeing a bottom? And I'd mentioned on Friday that in order for us to confirm a bottom, a short-term bottom in here, we need a daily close above 31.12. I posted that in the room, and we haven't gotten it. I mean, you see they defended this 30.37, but you have to get above 31.12 on a daily close to say now we have a bottom. And obviously you can see, we're weaker here. I will take a quick look at indices. We saw that late day sell-off on Friday, and I talked about, even though they're pushing hard, I did not think that we were in a brand new leg. I said that this was more about shorts being stuck from the prior Wednesday and Thursday. We went at length. I'm not going to spend a whole lot of time on that again, but we talked about, how on that Wednesday, how we were up and down, up and down. I have to see it here on a two, and I'll just touch on it just rather quickly. we'd seen the up and down, up and down, up and down. So then when we, up, down, and this was actually that Wednesday, and then we broke lower. It looked like I myself thought, boy, we're going to head much lower, and then we saw that rebound, and then we went even further here on Friday, and so the market was just back and forth, and then of course we had this sell-off, and my thought was this is really more about people being stuck short from Wednesday and Thursday. Wednesday, here's Thursday. So I didn't think they could press up a little bit higher, but I didn't think it was a brand new lake, and then hence we saw this sell off. We'll see what happens today, but that just puts it in context. I'll just take a quick look at SPOOs. You can see where we're at right now. We need to get above right there, which would be 35.85. That's going to be resistance for right now. So we'll take a look at the news. New Zealand dollar scales two-year top as retail recovery shatters records. The New Zealand dollar climbed to a two-year peak on Monday as domestic data on retail sales blew past all expectations, quashing the risk of further policy easing and underlining the currency's yield attraction. The Kiwi dollar jumped to 69.61 and cleared peaks from January and March 2019. It was now tantalizing close to 69.69, and I think our bias chart resistance for today is 69.75. The high from December of 2018, a break which would take it to levels not seen since June of that year. The Australian dollar was dragged hard in its wake to reach 73.20, though that was short of recent peaks and major resistance at 69.39. The gains came as data showed retail sales in New Zealand boomed by a record 28% in the third quarter, recovering strongly from a historic 14.6% drop the previous quarter when strict coronavirus lockdown crippled consumption. That was above market expectations and suggests upside risk to the gross domestic product report for the third quarter due next month. Today's result is another tick in that column, highlighting the resilience of the household spending appetite, said Satish Ranchold. Also highlights the effectiveness of monetary and fiscal stimulus in supporting the demand through what has been a trying time for the economy. Indeed, so robust that has been the recent run of data, investors have sharply scaled back expectations for further easing by the RBNZ. And the dollar stuck near support. The dollar eased back on Monday as the prospects of an early rollout of coronavirus vaccines offsets concerns about the economic restrictions to control the spread of the virus. Holiday in Japan kept most majors contained, though the New Zealand stormed to a two-year high. So that's probably why we're seeing things are just relatively quiet. Like I said, holiday in Japan. Obviously, we know Thanksgiving's this week. Analysts of capital economics are still bullish on the single currency's longer-term outlook, referring to the euro having repeatedly failed to break above 1893. It needs to clear the top of 1919 to extend its uptrend. We think the exchange rate will further rise over the next few years in the backdrop of the low Eurozone stability risks, an increased yield gap between the Eurozone and the U.S., and a continued recovery in the global economy, they wrote in a note. That lifted their forecast for the euro and now at 125 by the end of 2021 and 130 at the end of 2022. Wow. So looking for 125 by the end of 2021 and 130 by the end of 2022. Against a basket of currencies, the dollar was a shade softer at 92.26. Promises on vaccines. Let me see. On the other hand, millions of Americans are expected to ignore warning signs to stay home for Thanksgiving, while Germany might have to extend its lockdown until mid-December. The rash coronavirus restrictions across the U.S. has stoked speculation the Federal Reserve may have to ease monetary policy further, particularly with no fiscal stimulus deal in sight. Last week's surprise move by the U.S. Treasury Department to end some emergency lending programs only added to the speculation. That will heighten the focus of minutes of the U.S. Central Bank's policy meeting, which are due to be released on Wednesday. The minutes are expected to confirm the Fed policymakers discussed adding to the bank's asset buying plans. The minutes should help gauge whether our call for a lengthening of the maturity mix as soon as December's meeting remains on track. So with that, we'll get into the analysis. Drag this over here. So the euro for most of the past week traded in a 65 pip range. Resistance for the week will be 1905 with a daily close above that, igniting the upside. Support will be 1812. So we're looking for resistance at 1905 and support at 1812. And onto cable. And we were talking about this. It's going to be 3380 our bias chart resistance because that is a key level right there. We just said that now. 3380. Obviously, these closing. It could even push even a bit higher, but right there, that closing basis is actually it's 3383. Yeah. That's it, 3382. It's actually 82, not 80. Hang on. So 3382 is the bias chart resistance. Cable finished the week closing above 32.72, opening the door for a move to challenge 33.80. Well, there's a 33.80. And I put the resistance would be 33.20, but we've already broken through that, and we've really launched off. This is really key, that 33.82, and obviously the support down here would be meaningless. So 33.82, and then support, let's go to a 2-hour chart. Really support would be, you see this lower wick here, confluence with these wicks up here, that would be support. This will be 33.03, and then this wick right here, 33.12. There we go. But this 33.82, that's key, the close. And that's what I'm saying at the beginning of the show. I would expect some pushback right there. Or what I said was a dust up. So let's go move into the Aussie dollar. I'm even surprised the CAD was already this strong, although it closed strong for the week, so it opened the door for them to move higher. Look at the Aussie. So the Aussie closed at the end of the prior week just above 73. Resistance would be 73.37. Okay, with support at 72.54. So I put it at 73.37. This key level that's at right now is trying to pull that in. That's 73.30. The old big bar right there. So it's 73.37 for resistance. And support 72.54. On to the Kiwi. So the Kiwi closed the prior week above the key level of 68.96. The pair has immediate potential to 70.24 with resistance at 69.75. Support will be 68.66. So 69.75. And obviously it's not going to be down here. So support would be these touches coming across. See this wick, this body, that wick, that would be support, which would be right there, 1602. And on to the dollar CAD. Remember, the key weekly level is at 68.96, so that probably should be the support, but it's on its way up. But that would be the area where they'll try and make a stand at 68.96. Now, looking here at dollar CAD. Dollar CAD defended the 30.37 area last week, but will need a daily close above 31.12 resistance level to gain upside momentum. Support will be 30.37, and we're on our way down there. So 30.37. 31.12. And you can see here when we're making these couple of stands here on a daily basis, but you had to get above 31.12 to say, okay, we've done it. So we're just stuck in that range. So we're just testing both sides, but certainly still on a weakened path. On to the dollar peso. This thing is just horrible. I mean, absolutely abysmal. So the peso is a new closing low to take out the weekly pivot level of 2023. Support will be 1988 with resistance at 2024. And that's weekly support, 1988. And then 2024. And dollar yen. So the dollar yen posted an inverted hammer. You can see right here on Thursday. Friday was motionless. We didn't go anywhere. Seeing the same thing today, but of course, remember Japanese bank holiday. Resistance to start the week will be 429 with support at 344. And the cash dollar index. So the dollar index held above the 92 level for the prior week. The index remains susceptible to what appears to be an inevitable downside break. Immediate support is 92.06 with a break below 190 below 91.94 likely to trigger stops to the 91.20s. Resistance will be 92.78. So 92.06, which we had from last week, and resistance 92.78. Well, that's pretty move high. I would put the resistance now, considering today, off these 2 weeks, which that might be a stretch there to say it's already that week, but it really is. If you look at this week here, this week, and that week, you see that? So today's support, we can put it just 92.61. On to the Kiwi yen. Kiwi yen traded the prior week in a tight range defending the 71.40. You can see that. But could not sustain a move above 72 cents, which we're actually above it right now. Resistance to start the week will be 72.28 with support of 71.40. And Euro pound. So this went to new lows. So the Euro pound posted a bearish engulfing bar on Friday. You can see that. See, it's engulfing the prior Thursday. The pair should test stops at 88.75. You can see we're down there already, which will be support. Resistance will be 89.78. So you can see here. See that engulfed. Here's Thursdays. We engulfed it on Friday. Test and support at 88.75, which would be support, and that's where we're at right now. And resistance at this point is going to be this body right there. You see the opening of the body, which will be 89.32. Let's go move into the Euro odd. The Euro odd remained in a tight range for the prior week. You see here, pretty tight range there. Resistance will be 63.50, which obviously we're heading down lower, and support will be 61.52. And you can see right there where we're at. Right there. So 61.52. And 63.50 on the upside. Well, at this point, you're just going to go with the levels, which will go with the 63.17. Can go with this right here, which is 63, but we'll give it the 63.17. That would be key if things get turned around. So right here, we got that. It's already in place. Go to the Euro Kiwi. The Euro Kiwi closed the week sub 71.50. You can see that. Opening a challenge lower. Weekly support to be tested will be 69.86 with resistance at 71.87. And we did break low. Yeah, we'll stay with that, 71.87. And to the Aussie yen. So the Aussie yen posted a small bullish engulfing bar on Friday. The pair is attempting to put in a temporary bottom. Resistance will be 76.14 with support at 75.37. And UK data is about to come out right now. So looking at the guppy posted a minor bottom on Friday. You see that right here. The pair needs a daily close above 38.34 to generate further upside. Support would be 37.42. So we have 38.34. We're actually above it right now. We'll just stick with that. And if it gets above it, it gets above it. Probably going to hold there, considering it's a Japanese holiday. But that was going to, the key level was the 38.34, and they're above it. So there you go. And support, that's where we came up with that 37.42. It's actually 37.44. Should not be 37.42, but 44. 2 pips ain't going to make that much difference, but that's the actual support, which is the opening of this body right there. But we're pushed above that, and we were going with this up here for the right there. You see, so we're going with that for the resistance. They pushed above it, so probably might have been a little bit too tight, but of course, starting is strong today and starting odd to wrap up. Starting off, spent the last 3 days of the prior week in a tight range. You can see that. Look at that. For the pair to move higher on sustained pace, the pair will need to close above 82.68, and support will be 80.91. Well, we did make it up to that level, which is 82.61. So we need to get above 82.68, as I said. And we put support at 80.91. Maybe I can see what would come down here, but support would still be the right there. This body wick. You see these 2 wicks here, here. If it breaks out, that's it. And look, it even confluences with this wick. So you can see here. You see right there, all these wicks. So if we're breaking here, you'd have to take out these wicks. All right, the lower wick right there, which would be 81.23. Just put it, the lowest wick is right there. So let's call at this point 81.15. 55.2 for manufacturing data, and that'll be it. On the data just came out, we'll punch up again. Still holding up, but it looks like that high was that closing high that we have for resistance right there. Would be key if it were able to get a daily close above that. Take a look at where we stand right now. Here's Netflix on a daily. We need to get above that 492 to try and spark some type of movement. Tesla looking a little bit tired after challenging above 500. Amazon stuck near this, but just below 31. With Facebook at 270. I don't expect a whole lot of movement here. Yeah, just at 3101, not a whole lot happening. Microsoft, let's see how that closed weaker, 210.39, see where they're at. And pre-market, 211, but paring back just a bit. Apple and Google, same thing, just finishing just on the weak side. And NVIDIA, nice little yank down here, 523, see where they're at. Bolted up to 530, but we're at 527 right now. And back into the indices. We're almost ready to generate a buy signal if they can hold here. You can see here how they generated the buy signal here, tested it, finally got that break, and you can see how that really followed through. It just kept on. We bounced back here. Resistance is going to come in right around there at that 11,990 right there. See a lot of good touches there. Technically S&Ps. Well, we talked about that already. We'd have to get above 35.85. Looking at gold, still relatively weak. You can see here, we're still below just by a hair. Below that VWAP, which goes all the way back to, I think it's the June low. Oh, the April low. And it'd be the March low as far as that goes. Hang on. This goes back to that March low. You see that it's the March low. So when you look here, we're just above that VWAP off that March low. They're holding here, but remember, we kept looking for a move down here, which came pretty close between 1827 and 1844. But considering how weak the dollar is, this is not good news. We should be much higher. So this is not good news at all. If you are long gold, you're probably thinking like, what the heck? The dollar still remains weak and we're still not going higher. My thinking is that we could get one more downside swoop down here into this range here of 1827 to 1844. And that would take out these lows. Go down here and then you can put it in the bottom. But it's a quiet day, and with Japan closed, that's probably why. Also, it's a holiday week. We have Thanksgiving here in the U.S. So with that, we'll see how, find out a whole lot of movement until we get into the U.S. session. And that's all we have today. And thanks for joining us here on the European Crossover webinar.